Hello everyone. Today we will be taking up with the discussion of HFA Higher Financial Accounting subjects MCQs. Now since you have already attended by now AFS MCQs, you already know this pattern. So there are almost 29 variety of questions in this subject MCQs. From the recent exams October 2019 onwards, I'll start solving, and the similar questions are to be tried on your own. So take out your material everyone and take out October 2019's question number 2. Without wasting time, we directly start with the questions. Be attended. Following are the balances appearing in the books of Rose Limited as at 31st March 2019. Equity share capital rupees 10 each, fully paid up 12 lakhs. 10% preference share capital rupees 10 each, fully paid up 2 lakhs. So 2 lakhs divided by 10, you can say 20,000 preference shares are there. P&L account can be used for both, okay, for premium writing off as well as for redemption, transfer to CRR. Security premium can be used only for writing off premium, investments and bank balance. Now, the board of directors decided to redeem the 10% preference shares at a premium of 20% on 31st March 2019. Company issued 8,000 equity shares of 10 each at par for the redemption of preference shares. Investments were sold at rupees 70,000. Now 80,000 investments sold for 70,000. So again there is a loss of 10,000. Premium on redemption is required to be set off against security premium account only, means this won't be used, okay. Premium on redemption will not be set off from P&L account. It will be used only for redemption purpose. Entire premium will be written off from security premium. Calculate profit and loss account after redemption. What is the main question asked? Calculate profit and loss balance after redemption. So if you all remember in P&L account, this redemption of preference shares, we used to make the workings on the left side. Only that working is required. Okay, understand this? What is the profit and loss account balance after workings or after the redemption? Very first what we do is, first we find out the P&L balance given in the question, which is 3 lakh rupees. From that we subtract loss on sale of investment, which is 10,000, and further we have to subtract the amount transferred to CRR for the purpose of redemption of preference shares. Now here, what is this amount transferred to CRR? Understand this. Towards the face value, what amount of preference shares amount we have to pay? 20,000 into 10, that is 2 lakhs we have to pay towards the face value. Out of that 2 lakhs, what amount is available from proceeds of fresh issue of shares? From proceeds of fresh issue of shares, 8,000 into 10. Okay, this 8,000 into 10, 80,000 is available from proceeds of fresh issue of shares. So what is the deficit amount still required? 1,20,000. That we have to transfer to profit and loss account, from profit and loss account to capital redemption reserve. So what amount will be transferred over here? 1,20,000 will be transferred to capital redemption reserve. Now 3 lakhs minus 10,000 minus 1,20,000. What amount of balance will remain in P&L account after the redemption? 1,70,000. Okay. Now October 2019's question 9. October 2017's question 9 is a similar one. So all of you will try that on your own. Now look at the next question, question number 3. If 100 shares of 10 each are forfeited for non-payment of final call of rupees 3 per share, and only 50 shares are reissued for 250, amount to be transferred to capital reserve. Main question as this, what is the amount to be transferred to capital reserve? Now what we transfer to capital reserve is the profit on forfeiture. Now, how we used to find the profit on forfeiture? We used to find it as amount forfeited on reissued shares. Amount forfeited on reissued shares minus discount allowed. This is the formula to find the profit we have studied. What is the amount forfeited on reissued shares? Understand this. We have forfeited on 100 shares for non-payment of final call of rupees 3. Now, non-payment of final call of rupees 3 means, can I say he has paid 10 minus 3, 7. Whatever he has paid will be forfeited. Now, since only 50 shares are reissued, what will be the amount forfeited on reissued shares? 50 shares into 7 rupees is paid, that will be forfeited. From that, we have to subtract the discount. Now, if 50 shares are reissued at 250 rupees, then can I say 250 divided by 55 rupees is the reissue price? If 5 rupees is the reissue price, then 10 minus 5, can I say 5 is the discount? Okay, so discount allowed on the same 50 shares will be 50 shares into 5 rupees. Now 50 into 7, 350 is the amount forfeited. 50 into 5, 250 is the discount allowed. So 100 rupees is the profit that will be transferred to capital reserve. This is how this answer 100 is obtained. Okay. Now look at question number 5. Okay, similar to this, there are two questions asked in exams. September 2016 question 9 and October 2017 question 11. Both these questions all of you try on your own. Okay. Now I'm taking up with the 5th question. Look at it. A company issued 20,000 shares, of which 75% was underwritten by an underwriter. Okay, so this will give us the gross liability. Applications for 12,000 shares were received, out of which 9,600 shares were marked by the underwriter. So what are unmarked applications? You can say unmarked are 12,000 minus 9,600, 2,400. Determine the net liability of the underwriter. Now, how do we find the net liability? Gross liability minus, first we subtract unmarked applications in the ratio of gross liability. Okay, unmarked applications in the ratio of gross liability. Then we subtract marked application. This is a format I made you write in the notebook also. What remains is the net liability. Now, what is the gross liability here? Out of 20,000, 75% shares are underwritten by the underwriter. So 20,000, 75%, 15,000 is the gross liability. Now, gross liability 20,000, 75%, that is 15,000 is the gross liability. Now, unmarked application will subtract in the ratio of gross liability. Unmarked application we discussed is 2,400. So, out of again that 2,400, what will be this underwriter's share in the ratio of gross liability? 2,400 into 75%. That comes to 1,800. So, that we will minus. And we will minus the marked applications. So, marked applications are 9,600. Whatever amount remains, since there is a single underwriter, there is no positive balance, negative balance to be adjusted with other underwriters. What we studied in that chapter. So 15,000 minus 1,800 minus 9,600, 3,600 is the net liability. Now since 3,600 is not given over here, so your answer is none of these. Next. Question number 7. Okay, similar to this net liability question, no other question has been asked in exams so far, because net liability or underwriter's commission is a new topic taken up in the exams in this year. So you don't find such questions in past asked in exams. Now look at question number 7. Z Limited has allotted 10,000 shares to the applicants allotted 10,000 to the applicants of 14,000 shares on pro make it rata basis, not basic basis. The amount payable on application is rupees 2. X applied for 420 shares. State the number of shares allotted and the amount carried forward for adjustment against allotment money due from X. Now, first of all, if you all remember the pro rata workings, what we used to make, those columns are to be written over here. So we used to have number of applications, then we used to have number of shares allotted, okay, then we used to have application money received, then we used to have application money due, then surplus amount. So same calculation is to be done over here. So here if you see that he applied for 420 shares. Now when applied are 14,000, first sentence if you see, allotted are 10,000. Okay, when applied are 14,000, allotted are 10,000. Here he has applied for 420 shares. So when applied are 420, then what would have been allotted? Do it 420 into 10,000 divided by 14,000. How many shares would have been allotted? 420 into 10,000 divided by 14,000. 300 shares would have been allotted. Now, application money is 2. So, now application money is 2 rupees. So, what he has paid is 420 into 2. That is 840. And what he was supposed to pay is this 300 into 2. That is 600. So 840 minus 600, what is the surplus? 240, that will be adjusted with allotment. Okay. So what is the question asked? Question asked is, what are the number of shares allotted? 300. And how much will be adjusted with allotment? 240. Okay, that is your answer. Next, question number 12. Okay, now this is similar to question 7. Similar to this question 7, there are 3 more questions which you can try on your own. Initially, in the beginning, you'll find one topic of part 4 of issue of shares from that question 36. Then September 2016's exams question 13. And October 2017's exams question 10. These 3 questions you all can try on your own. They are similar to this one. Now, question 12 and 14 both are based on CRR transfer in redemption of preference shares. So look at question number 12 and 14 both. Okay. ABC Limited issued 5,000 10% preference shares of 100 each at par, which is redeemable at a premium of 10%. 5,000 preference shares are there of 100 each, redeemable at 10%. For the purpose of redemption, company issued 3,000 equity shares of 100 each at a premium of 20% per share. In fact, 20% will be 20 rupees only. So you can say premium of 20 rupees per share. At the time of redemption of preference shares, the question asks this, the amount to be transferred by the company to capital redemption reserve account is. Now, what profits will be transferred to capital redemption reserve? So only that face value part of working is to be done. The face value of preference shares to be redeemed is 5,000 into 100, that is 5 lakhs. Now out of that, what are the proceeds of fresh issue of shares available? Okay, proceeds of fresh issue of shares is, you all have to consider only face value for that premium is not to be considered. So proceeds of fresh issue of shares 3,000 into 100, that is 3 lakhs. Okay, 3,000 into 100, that is 3 lakhs. Out of 5 lakhs, 3 lakhs is available from proceeds of fresh issue. So remaining 2 lakhs will transfer from P&L account to capital redemption reserve. So what amount will be transferred to capital redemption reserve? 2 lakh rupees will be transferred to capital redemption reserve. Now look at question number 14, which is again based on the same capital redemption reserve. A Limited decides to redeem 1,012% preference shares of 100 each fully paid up at a premium of 10%. that it has general reserve of 80,000, PNL of 40,000 and security premium of 2,000. General reserve and PNL both can be used for redemption, but security premium can be used only for writing of premium. And in fact, PNL and general reserve can be used for writing of premium also. The company decides to redeem the preference shares out of fresh issue of 10,000 equity shares of 10 each at par. So calculate the amount to be transferred to capital redemption reserve, same as we did just now. You all must be able to try on your own. We'll consider only face value part. So 1,000 shares into 100 rupees, 1 lakh of preference shares is to be redeemed. Minus, what is the proceeds available from fresh issue of shares? Okay, what are the proceeds available from fresh issue of shares? You all can see that 10,000 equity shares of 10 each are issued at par. So 10,000 equity shares into 10. The proceeds available from fresh issue of shares is also 1 lakh. So no amount is to be transferred to CRR. Okay, no amount from profits is to be transferred to CRR because share capital decreases by 1 lakh and simultaneously it is increasing also by 1 lakh. So the constant point of share capital is getting maintained. Now 16th question. M Limited was incorporated on 1st, okay, there's a date of incorporation, 1st of August 2018 to take over the running business of SN Company with effect from 1st April 2018. The profit and loss statement was prepared for the year ended 31st March 2019. Total office rent for the year is 60,000. Office rent was paid at 4,000 per month up to 30th September and thereafter it was paid at 6,000 per month from October onwards. Calculate office rent to be allocated to pre-incorporation and post-incorporation period. If you remember some important questions of profit prior to incorporation, we have done this workings. So that workings is asked over here. Very first of all, which are the 3 dates? The 3 dates are 1st April 2018, the company has acquired the other company. 1st August 2018. 1st April it is acquired, 1st August it is incorporated and 31st March 19 is the year ending. So this is your pre-incorporation period and this is your post-incorporation period. Now April, May, June, July, 4 months is pre-incorporation and August to March, 8 months is post-incorporation. Now what we used to do, if you all remember, was we used to write April, May, June, July, August, September, October, November, December, January, February and March. Now here April, May, June, July is pre-incorporation and August to March is post-incorporation. Now what is the rent? Rent is 4,000 per month till 30th September. So we can say that April it is 4,000, May it is 4,000, June, July, August, September. These all months it is 4,000 and thereafter it is increased to 6,000. October onwards it is 6,000. So what is pre-incorporation rent? 4,000 into 4 months, 16,000. What is post-incorporation rent? 4,000 into 2 months, 8,000 plus 6,000 into 6 months, 36,000, that is 44,000. 16,000 is pre-incorporation and 44,000 is post-incorporation rent. Okay, so similar to this question 16, you all can try question 7. Okay, question number 7 of October 2017 on your own. Now look at question number 18, amount payable to preference shareholders based on that. Based on following information, find out the amount payable to preference shareholders at the time of redemption of preference shares. 2,500 10% preference shares of 100 each, 2,50,000 are there. Final call of 25 per share is unpaid on 12,500. So 12,500 divided by 25. On how many shares the money is not paid? The calls are in arrears. On 12,500 divided by 25 on 500 shares. The calls are in arrears. Now, whatever are calls in arrears, they cannot be redeemed until they pay the money. First condition of section 55, only fully paid up preference share can be redeemed. So, out of 2,500, we cannot redeem 500 preference shares where there are calls in arrears. Means we can redeem only 2,000 preference shares. Now, the question asked is what amount is payable to preference shareholders. Okay. So what is the amount payable to preference shareholders? The board of directors decided to redeem. See, again it's given. Only fully paid up. So what are the only fully paid up preference shares? 2,000. And at a premium of 10%. So 100's 10% premium will be 10 rupees. Means we will be paying them 110 rupees. So what is the amount payable to preference shareholders? 2,000 into 110, 2,20,000. Okay. The amount payable to preference shareholders will be 2,20,000. I hope everyone is clear with this. Now, question 22. Okay, similar to this, question number 18. No other question has been asked in exam. Okay, now look at question number 22. Preliminary expenses is rupees 60,000. Time ratio is 2:5. Sales ratio is 3:1. Compute the amount to be charged to pre-incorporation period. Now, if you all remember, preliminary expense is always a post-incorporation expense because preliminary expense will come only once the company is formed. So, entire 60,000 will go in post-incorporation period on actual basis. So, what amount will be going to pre-incorporation period? Nil amount. Okay, full 60,000 will go on post-incorporation in post-incorporation period. So in pre-incorporation period, no amount will be taken. 24th. Okay, similar to this, one more question has been asked in exams. That also you can try on your own. Question 7 of October 2017. Okay, you can refer to that. Now, next is question 18. Okay, 18 is done, I'm sorry. Similar to 22, 18th question of October 2018 has been asked. So all of you try that question on your own. October 2018 question number 18. Okay. Now we will be taking up with question 24 and 30. 24 and 30 both are based on sales ratio. So both I'll take up simultaneously so that similar questions you can try on your own. So look at question number 24 first. Be attentive. Shiva Limited was incorporated on 1st August 2018 to take over the running business of Shakti and Company with effect from 1st April 2018. 1st April is the date of taking over the business. 1st August is the date of incorporation. The company received the certificate of commencement. Certificate of commencement is of no relevance. Ignore that. On 1st September 2018. Okay, simply ignore. We have studied that earlier also. Company prepares the profit and loss statement for the year ended 31st March 19. Now, important is this. Sales for the months of August, September and October was triple as compared to other months during financial year from April to March. Very first, you write down all the months. April, May, June, July, August, September, October, November, December, January, February, March. Now, 1st April to 1st August means April, May, June, July. 4 months is pre-incorporation period. Okay. And then August onwards, 1st August to 31st March, 8 months is post-incorporation period. Now what do they say? Read this carefully. That sales for the months of August, September, October. August, September, October. These 3 months sales. They are triple. Okay, these are triple as compared to other months during the financial year. So other months sales we take it as 1. For all the other months we take the sales as 1. And in these 3 months it is triple means 3. In these 3 months it is triple compared to other months means it is 3. Now 1, 2, 3, 4. and 3 plus 3, 6 plus 3, 9, 10, 11, 12, 13, 14. So if you find the ratio of sales, what will it come to? 4 is to 14. Okay, so that ratio is your answer, 4 is to 14. I hope everyone is clear with it. Wherever any confusion is there, I advise that you all can rewind the video and listen to it once again. Okay. Now all of you see, similar to this, one more question is there in the current exam itself, 30. So that I will again solve, and then you try the related questions on your own. So look at question number 30 of the same exams. Based on the following information, compute the sales ratio. Total sales of F Limited on 31st March is 32 lakhs. It was incorporated on 1st October, and up to 1st October the sales is 8 lakhs. So what is the sales ratio? Understand this. First of all, you can say 1st October it is incorporated. So we assume 1st April is the year beginning. Okay, it's given in fact 31st March is the year ending. So 1st April is the year beginning. 1st October 2018 is the date of acquisition, and 31st March 2019 is year ending. So this is your pre-incorporation period, and this is your post-incorporation period. Now you are given that total sales is 32 lakhs. Okay, total sales is 32 lakhs. And out of that, up to 1st October the sales is 8 lakhs. Means pre-incorporation period from this April to October the sales is 8 lakhs. So 32 minus 8, we can say 24 lakhs is the post-incorporation sales. Now 8 and 24 both are divisible by 8. 8 divided by 8 is 1. 24 divided by 8 is 3. So what is the sales ratio? 1 is to 3. Okay, so 1 is to 3 is your answer. Now based on this, two questions what I did right now, you all can try so many questions on your own. 36th question of college material 10 to 11, 5th question of September 16 exams, and 14th question of October 2017's exams. All these questions you can try on your own based on that. Okay. Now look at question 26, which is based on salaries charged to pre-incorporation period. Look at question number 26. Compute the amount to be charged to pre-incorporation period from the following particulars. Salaries is 80,000. Time ratio is 2:8. Sales is 1:3. Now salary always goes in time ratio, so ignore the sales ratio. 2:8 means pre-incorporation period sales is asked. So 80,000 into pre-incorporation 2 by 10. 2 by 10 and 8 by 10. So this 2 by 10, that is 16,000. Okay. So similar to this question 26. No other question has been asked. Now interest on purchase consideration based question 28. Look at it. SAM Limited was incorporated on 1st October 2018 to take over the running business of Smith and Company with effect from 1st April 2018, and company prepares profit and loss statement for the year ended 31st March 2019. Now purchase consideration is given as 5 lakhs, which was paid on 30th November 2018. So we have to find the ratio only till 30th November for paying the purchase consideration. And interest on purchase consideration is payable at 9% per annum. Calculate interest on purchase consideration and its apportionment in pre and post incorporation period. Now, 1st April 2018 is the date of purchase. 1st October 2018 is the date of incorporation, and 30th November 2018 is the date of repayment. So till the date of repayment, what is the pre and post incorporation periods ratio? Till the date of repayment. Okay. April, May, June, July, August, September. 6 months is pre, and then October, November. 2 months is post. 1st October to 30th November means October and November, 2 months is post. Now total interest we have to pay for 8 months. Till November we have to pay total interest for 8 months. So first question asks this: calculate interest on purchase consideration, that will count for 8 months total. You all can see 5 lakhs is the purchase consideration. Okay, this 5 lakhs into rate of interest is 9% into 8 months interest total. So 8 divided by 12. Do it everyone. 5 lakhs into 9% into 8 divided by 12. The total interest payable is 30,000. Out of that 30,000, 6 and 2 means you can say 2 3s are 6, 2 1s are 2. Both are divisible by 2. So 3:1 ratio we will distribute this 30,000 of interest. So 30,000 into 3 by 4. 30,000 into 3 by 4. Okay, that is 22,500 will be pre-incorporation interest, and 30,000 into 1 by 4, that is 7,500 will be post-incorporation periods interest. Okay, so we got this answer. 30,000 pre-incorporation, total is 30,000 pre-incorporation, 22,500 is post-incorporation 7,000. Now, similar to this question number 28, there is no other question, so we take up with the next one. Now, all questions of October 2019 practical are covered. So now next is directly from which exams? October 2018. So all of you take out the part of October 2018 exams. From that I am taking up question number 2. Okay, share forfeiture credit amount, then 12, and then this 3 and 56, 57, 58. So many questions are as you can try on your own. So look at question 2 of October 2018 exams, everyone. 2 and 12 both I am solving. A share having a face value of rupees 100 issued at par, called up rupees 70, forfeited on non-payment of rupees 30. So out of 70 called, 30 was not paid. So we can say 40 was paid, which is forfeited. On forfeiture, share forfeiture account will be credited by what amount? 40 rupees, as we discussed just now. Okay, so that is your answer. Now, 12th question is also based on forfeiture. See that. X Limited invited applications for 50,000 equity shares of 10 each, payable rupees 3 per share on application, 3 is on application, 4 per share on allotment, and again 3 per share on final call. The entire amount of share money is received in full, with the exception of allotment, means these are calls in arrears, and final call money on 3,000 shares, and these shares were forfeited. So calculate the amount to be transferred to forfeiture account. So whatever amount is paid will be forfeited. Now what he has not paid is allotment, exception of allotment and final call money on 3,000 shares. So we can say that he has paid only application money of rupees 4. Okay, whatever he has paid will be forfeited. Now here application money, how much is paid? 3 rupees is paid on application. Okay, so 3,000 shares and 3 rupees is paid on application, means 3,000 into 3. What will be forfeited? 9,000. Okay, so that is your option A. Now look at question number 11. So similar to this 12 question number, and okay, this exams 2 and 12, you all try so many questions on your own. From this part 4 in the study material, issue of shares, you try question 56, 57, 58. Then from September 2016, you try question number 3 on your own. So these 4 questions all of you can try on your own. Now same exams, after this 2 and 12, we take up an 11 question based on bonus shares. Look at it. M Limited has issued share capital of rupees 20 lakhs in rupees 10 equity shares. It was decided that fully paid up bonus shares of rupees 10 each to be issued at the rate of 1 share for every 4 shares held. 1:4. You are required to calculate the number of bonus issue. Very simple. Rupees 20 lakhs in 10 equity shares. So first of all, 20 lakhs divided by 10. How many equity shares are there? 2 lakh equity shares are there. Now if 1:4 is the bonus ratio, then 2 lakhs into 1/4. How many bonus shares will be given? 50,000 bonus shares will be given. So 50,000 is your answer. Okay. Similar to this, I think no other question has been asked in exams. Okay. So after this 11th, I take up with question 20 and 25. Similar to that, also no other questions have been asked. So look at the next question 20 of same paper, October 2018's question 20. ABC Limited is incorporated on 1st August 2017 to take over the running business of PN company from 1st April and year ended 31st March. Calculate time ratio. So write the three dates in chronological order: 1/4/17, 1/8/17, 31/3/18. Okay. Now 1/4/17 to 1/8/17, 4 months is pre-incorporation period, and August to March post-incorporation period is 8 months. So 4 months and 8 months both are divisible by 4. 4 divided by 4, 1. 8 divided by 4, 2. 1 is to 2, 1/3, 2/3 is the time ratio. Okay. Now look at question number 25 of same exams. A Limited acquired a business. Assets acquired worth rupees 15 lakhs and liabilities taken over amounted to 2 lakhs. Purchase consideration payable by issue of 1,40,000 equity shares of 10 each at par. What amount will be transferred to goodwill account? Now, goodwill means if we are paying more, it is transferred to goodwill. So, what are we getting? We are getting assets of 15 lakhs. Against that, what are the liabilities also we are taking over? We are taking over liabilities also of 2 lakhs. Okay, assets of 15 lakhs, liabilities of 2 lakhs. So what is the net asset we are getting or net benefit we are getting? Net assets what we are getting is 13 lakhs. Now against 13 lakhs, what are we paying? We are giving 1,40,000 equity shares of 10 each at par. Means we are paying them 1,40,000 into 10 rupees value, 14 lakhs. So how much more we are paying? We are paying 1 lakh rupees more. That will be transferred to goodwill account. Okay, so 1 lakh would be the amount of goodwill, right? So similar to this also, there is no other question which has been covered in exams. Now October 2018, all questions have been covered. Now we take up with October 2017's question 3 and 5. So again 3 has not been repeated, but 5 has been repeated. So however, look at question number 3 first. Okay, October 2017's question number 3. K Limited was incorporated on 1st October 2016 to take over running business of Messrs. Lal and Company with effect from 1st April 2016. Year ended on 31st March 2017. So incorporation date, purchase date, year ended. Total sales for the year amounted to 32 lakhs, out of which sales of pre-incorporation period is 8 lakhs. And commission of 0.5% was paid on sales. Find out the commission of pre-incorporation and post-incorporation period. Commission will go in sales ratio. Okay, first of all, what are the 3 dates? April 2016, August 2016, date of incorporation, 31st March 17, year ending. So April to August is pre-incorporation period of 4 months, and August to March is post-incorporation period of 8 months. Anyway, time ratio is not required, we require sales ratio. Here, what is the sales? You all can see that total sales for the year is 32 lakhs. Total sales for the year is 32 lakhs. Out of that, make it pre, not price. Make this correction over here. It should be pre-incorporation, not price. Okay. So out of that pre-incorporation period sales is 8 lakhs. Out of 32 lakhs, 8 lakhs pre. So we can say post-incorporation sales is remaining of 32 lakhs minus 8 lakhs, 24 lakhs. 8 lakhs divided by 8 lakhs, 124 lakhs divided by 8 lakhs, 3. So 1:3 is the time ratio. Now, if commission of 0.5% is paid on sales, then commission will be 32 lakhs into 0.5%. That is equal to 32 lakhs into 0.5%, that is 16,000. This we will allocate in sales ratio. So 16,000 into 1 by 4, 4,000, and 16,000 into 3 by 4, 12,000. So what is the pre and post incorporation sales? 4,000 and 12,000. Okay, so this is how we have to solve the question. Now similar to this question number 3, that is commission on sales. No other question has been asked. So we take up with question number 5 now, which is based on number of fresh issue of shares on redemption. Similar to that, 4 questions are there which you can try on your own. So look at the 5th question of the same exams, everyone. Following is the balance extracted from M Limited on the date of redemption of preference shares. Preference share capital rupees 100 each, fully paid up 65,000 rupees. So 65,000 divided by 100, you can see 6,500 shares are there. Profit and loss account is 48,000. A P&L account can be used for both redemption as well as writing of premium. Investment is 18,500. Bank balance is 31,000. In order to facilitate the redemption of preference shares at a premium of 10%, the company decided to sell the investments for 15,000. 18,500 investments sold for 15,000 means 3,500 is the loss. To finance, now this we had done in the last questions, part of redemption from company's funds. Okay, this we had done in the last important questions, subject to a leaving a bank balance of 12,000 and to issue minimum equity shares of 50 each at a premium of 10 per share to raise the balance of funds required. This is the last kind of questions we had done in the preference shares chapter. You are asked find the number of fresh issue. So 2 workings will have to be done. First we have to find out from bank balance how much we will obtain, and then from that we will get the number of fresh issue of shares. Second working here is not required for redemption of preference shares, because from bank balance workings itself we'll be able to find what is the balance of funds required. So all of you look at it once again. Very first, what is the bank balance already there? Already there is a bank balance of 31,000 rupees. Now if you sell investments for 15,000, so further you will sell investments for 15,000, means 31,000 plus 15,000 will be able to accumulate 46,000 rupees. Okay, and against that 46,000 we have to leave a bank balance of 12,000. So how much is available for redemption if you leave a bank balance of 12,000? Balance to be kept is 12,000. Okay, same workings if you all remember we have done in last lecture of preference shares. So 46 minus 12,000. If you subtract 12, then what is the bank balance we will be having available for redemption? 34,000. And I think figures are also same. This is what is available for redemption. Now 34,000 is available for redemption. What is the preference shares we have to redeem? 65,000 at a premium of 10%. So what is the amount payable to preference shareholders? The amount payable to preference shareholders will be 65,000 plus 10% premium 6,500, 71,500. Out of that the available amount we will minus. 34,000 we already have with us. So 71,500 minus 34,000. We still are in a deficit of 37,500. Okay. Now this is what we want to get, 37,500. And we are going to issue equity shares of 50 plus premium of 10 means we are going to get 60 rupees on every share. Okay. What is the issue price of equity shares? 60 rupees. 50 plus will get premium of 10 also. So we'll get 60 rupees on every share. Means if you get 60 rupees on every share, then what are the number of shares to be issued to get 37,500? 37,500 divided by 60. Okay, 37,500 divided by 60. 625 equity shares are to be issued. And remember, same figures were there in our practical question. So you all can see this answer, 625 equity shares are to be issued. Okay. So similar to this question, 4 questions are there which you can try on your own. Okay. Which questions? 24 and 25 of part 5 and 2 and 19 of college material 10 to 11. All these questions you all can try on your own. Okay. Now, 8th question of September 2016 exams I am taking up. Look at that. 8th question of September 2016 exams. A Limited acquired a business. Assets acquired worth rupees 5 lakhs and liabilities acquired or taken over worth rupees 2 lakhs. Purchase consideration 4 lakhs. Difference amount will be transferred to which account? Just now we did that. You acquired asset of 5 lakhs, liability of 2 lakhs. So net assets are 3 lakhs. Okay, just now we did that similar kind of a question. Against that you are paying 4 lakh rupees. Okay, you are paying more or less, you are paying more. So where will you transfer the difference? Because you are paying more, goodwill account. If you pay less, it will go to capital reserve account. Now we come to college material 10 to 11 questions. All of you look at college material 10 to 11 questions. Okay, in that I am taking up with question number 13. Look at it. College material 10 to 11 question number 13. A limited company purchased machine worth rupees 1,15,000 from Indian traders. Payment was made to rupees 10,000 by cross check and remaining amount by issue of, okay, what is the remaining amount? First of all, 1,15,000 minus 10,000, 1,05,000. This amount is paid by issue of equity shares of face value of 10, fully paid but at an issue price of 10.5. So 1,05,000 we have paid by issue price of 10.5, means 1,05,000 divided by 10.5. Can we say 10,000 shares are issued? Now amount of share premium will be 10,000 shares are issued, so 10,000 shares into 0.5 rupees of premium. So 5,000 is the amount of premium. Okay, so this is college material 2013 10 to 11 13 question, very simple one. Then same question 14, again there is no similar question asked, so same college materials question number 14, have a look at it. Ankush Limited had issued 10,000 10% preference shares of rupees 100 each, fully paid up. Okay, the company decided to redeem these preference shares at par by issue of sufficient number of equity shares of rupees 10 each at a premium of rupees 2 per share, fully paid up. Here make the correction, not the records, it should be the proceeds. Make the correction, the proceeds of fresh issue of shares will be. Now here no amount of profits are available, so we want to pay 10,000. Proceeds of fresh issue means you will take only face value into consideration. 10,000 shares into 100 rupees. What we have to pay towards the face value is 10 lakhs. Out of that, no profits are available, so entire 10 lakhs we have to get by issuing equity shares of 10 rupees. So 10 lakhs divided by 10. 1 lakh equity shares will be issued. So what will be the proceeds available from 1 lakh equity shares? 1 lakh equity shares into 10 rupees. The proceeds available will be equal to 10 lakhs. Okay. Now part 5, redemption of preference shares. Look at question number 11. Okay. This 14th question, again similar, no other questions have been asked in exams. So now we take up with this part 5, which is question 11. 12 and 19 are based on number of shares to be issued for consideration other than cash. So look at question 11 of that. Then 12, 19 and all other similar questions you'll be trying on your own. Hero Industries purchased plant from Hind Industries for rupees 10 lakhs. The company paid 2 lakhs in cash. So 10 minus 2, what is pending? 8 lakhs. And agreed to allot 15% redeemable preference shares of 100 each at a premium of 25% for the balance amount. The vendor will be allotted 15% shares of 100 each. So what is asked over here is the number of shares. How many shares are to be allotted? 8 lakh is what we have to pay. And we are going to pay by 100 rupees preference shares at a premium of 25%, means issue price is 125 rupees. So to pay 8 lakhs at 125 rupees preference shares, how many preference shares we will have to issue? 6,400. Actually this question is not on redemption of preference shares, but it is actually based on issue of shares for consideration other than cash. Okay, here we are buying plant and against that we are issuing the shares. So the question is actually based on issue of shares for consideration other than cash. And very simple question, 8 lakh remains pending. Out of 10 lakhs, we have paid 2 lakhs in cash. How are we going to pay this 8 lakh? By giving preference shares of 100 as 25% premium. So issue price is 125. So 8 lakhs divided by 125. How many shares will be issued? 6,400. Now similar to this question 11, you all can try so many questions on your own. 12th and 19th of the same one, and even 41st question of part 1 of part 4 of issue of shares. Okay. Now part 4 of issue of shares I'll be taking up with question 4 and 33, which is based on interest on calls in arrears. So 4 I'm taking up, 33 you'll try on your own. Look at question 4 of part 4 of issue of shares. The directors of E Limited made the final call of rupees 30 per share on May 15, 2004, indicating the last payment. This is important. Last date of payment of call money to be 31st May. Mr. F, holding 5,000 shares, paid the call money. Now he has paid late. He has paid instead of 31st May on 15th of July. Now they say the company, if the company adopts now, this is 2004 examinations question. So in past, company used to adopt table A, but now instead of table A, make it table F. After 2013, table A of articles of association has been replaced with table F. What you are asked is the amount of interest on calls in arrears. Now in theory, we have studied that the rate of interest as per table F is 10%. The rate of interest to be paid as per table F is 10%. Now, 31st May to 15th July. 31st May to 15th July means we can say he has paid the money 1.5 months late. Okay, he was supposed to pay on 31st May, but he paid on 15th July. So June month complete and July half month. He has paid the money late by 1.5 months, 1.5 months. So how will we charge interest on calls in arrears? On 5,000 shares, he was supposed to pay 30 rupees. So he was supposed to pay 1,50,000 rupees. On that, he will have to pay interest of 10% as per table F for 1.5 months. So 1.5 divided by 10. Do it everyone. 5,000 shares into 30, 1,50,000 into 10% interest into 1.5 months divided by 12. He will have to pay interest of 1,875 rupees. As per table F, the rate of interest on calls in arrears is 10% per annum.